Hi everyone, and welcome back to episode 2 of our tax tips and investing series. In our last video, we introduced you to Steve and John, two individuals living and working in Canada who make $50,000 and $110,000 a year. In today's video, we're going to take a closer look at how income taxes are calculated in Canada, in particular, how tax brackets work and how different types of income are taxed. When you live and work in Canada, the more money that you make, the more money you have to pay in income tax on each additional dollar that you earn. You might have heard someone refer to tax brackets before. The more you make, the higher the tax bracket that you're in. If you're in a higher income tax bracket, you might be paying 30% in taxes versus someone in a lower bracket paying only 15%. You might have also heard someone say, there's no point on making more money because you'll be pushed into the next tax bracket, so you're actually going to be earning less. There is some truth in these statements, but there's also some misunderstandings. So what are the tax brackets and how do they actually work? Here are the tax brackets for the 2021 tax year, the rate you'll be charged when you file your taxes this upcoming April. Now keep in mind, this is only the federal portion of your taxes, but your tax return also includes provincial taxes. We're only going to look at federal taxes today as it applies to everyone, but we will include the link to the provincial rates in the description below so you can find out what they are depending on which province you live in. Looking at the different tax brackets, you might think that since Steve makes $50,000, he would fall into the 20.5% tax bracket, and John would be in the 26% tax bracket. But that isn't actually the case. Instead, both Steve and John will start at 15% and will slowly work their way up the tax bracket ladder as they continue to earn more money. So instead of John paying 26% on everything that he earns, it actually looks more like this. On the first $49,020, he will owe 15% in federal taxes. On the next dollar that he earns, up to $98,040, he will owe 20.5%. And finally, above that, up to and including $110,000, that is where he will pay 26% in federal taxes. So if we compare that to Steve, you can see that they are charged the same way when it comes to income tax. However, since John earns more, some of the money that he earns is taxed at a higher rate. We mentioned earlier that not all income types are taxed the same. What did we mean by that? As we've already learned, your salary from work is taxed according to the tax brackets. Investment income, however, is taxed a little bit different. Let me show you what we mean. Let's say that Steve instead made $50,000 by selling stock that he had. This $50,000 is called a capital gain, and it is the difference between what he bought and sold his stock for. Compared to $50,000 in salary income, Steve would only have to pay tax on $25,000 out of the $50,000 that he earned. We tax capital gains differently than we do salary income, and as of right now, you only have to pay tax on 50% of what you make in capital gains. So on the same amount of money, Steve would only owe this much in taxes. He is still climbing the tax bracket ladder, but only half of what he made is taxed. Let's say instead of Steve selling the stock, he had a large investment portfolio that earned $50,000 in dividends. In this case, there are some tax advantages and credits when you earn dividend income compared to when you earn $50,000 in salary income. In this case, Steve will not owe any federal tax. This doesn't mean that dividend income is always tax-free, but at $50,000, the credits Steve can claim completely offset all of the federal taxes owing. If you're someone who prefers to save your money in bank accounts or purchase low-risk investments like GICs, those are taxed the same way as your income from work. There are no tax savings when you earn interest. However, there are ways that you can lower your taxes owing, including deductions that you can apply for when you file your taxes, and also ways that you can increase the amount of benefits that you qualify for. We'll be covering this in our upcoming videos, so stay tuned and thanks for watching.